Good afternoon, everybody, and welcome to our Industry City program at Mobile World Congress, Las Vegas. This is the second session of our FinTech Summit. We've got one more following this if you're around a little bit later, and this one's on the transformation of payments. My name's Brian Gorman. I'm the FinTech lead at the GSMA, so we're delighted to see you all here this afternoon, and a big thanks to you for coming, and also to our partners, NTT, Telesign and Worldpay, for their support in helping us create the session this afternoon. In terms of the structure of the session, delighted to say what we're really going to explore is some of the payment trends, but also some of the opportunities and therefore solutions that partners we work with have created to exploit those opportunities. In terms of partners, we have Jeff DeLong from Worldpay. So Worldpay, as you know, global player, huge scale, so fantastic to get their support and insight today, as well as two companies, Telcoin and TBCASoft, who are using blockchain technologies to create new propositions and exploit new opportunities. So we're delighted to welcome Ling and Rajesh also. So my role is really to introduce the guys, and so I'd like to hand over now to Jeff for the first presentation.
Thank you, Brian. And good afternoon, everybody. My name is Jeff DeLong. I'm the Director of Vertical Growth for the Government, Utilities, and Telco verticals at Worldpay. And I'm excited to be here today to share a little bit about how the right payment strategy can open doors for you and your business. First, I'll start to take a moment to let you know who we are. FIS is a global financial technology company that provides solutions to merchants, banks, and capital markets firms. We manage the movement of over half the world's wealth. So when you buy a cup of coffee, check your account balances, or reallocate your retirement portfolio, there's a good chance you're using our services. The Merchant Solutions segment is known as Worldpay and provides acquiring and gateway services to enterprise businesses, SMBs, and we also provide a broad portfolio of value-added services. Our business is worldwide. The Merchant Solutions segment alone processes nearly 50 billion transactions annually for over $2 trillion in 126 currencies across 146 countries. And we support over 300 alternative payment methods, such as Alipay and PayPal. Together, this makes us the #1 non-bank global acquirer. So why does this matter for a telco company? There are many payment service providers out there, but the right one with a global presence can be a strategic partner rather than just a cog in the wheel. Customers require a personalized experience, whether they're enterprise businesses, SMBs, or individual consumers. Many companies today are global companies. In fact, many in this room have an international presence. And even if you're not a global company yet, the right payments partner with global scale can make payments a differentiator for you. Somebody who has the ability to help you leverage existing assets to create new revenue opportunities and make your business more efficient. Things like your existing customer base, which requires an embedded, frictionless purchasing experience. Connectivity. You already provide the pipeline and the pathway to enable new and alternative payment methods. And data accessibility. You guys facilitate the know your customer process, and you provide the information that allows us to determine whether a transaction is fraudulent with near certainty, oftentimes before it even happens. All of this puts the customer at the center, but has the ability to open new doors for you if you know where the market is and where it's going. So with that as the backdrop, I'd like to start by explaining a few emerging trends that we're seeing today globally. The first I'll talk about is the rapid ascent of digital wallets. For those that are unaware, digital wallets allow consumers to securely store payment credentials on devices like a phone or a watch, and subsequently pay for those purchases virtually anywhere, whether that's in-store, online, or in-app. These can be funded directly via cash, bank transfer, or even cryptocurrency. or it can serve as a pass-through mechanism that's linked to a credit card or your bank. We've seen rapid growth of digital wallets in both the online and point-of-sale channels, but that's something I'll touch on a bit more here in a minute. The next topic I'd like to discuss is the emergence of Buy Now, Pay Later, or BNPL for short. Buy Now, Pay Later allows consumers to make a purchase and defer payment into the future, either through a one-time invoice or a finite set of installments. We found that merchants see an average of 10 to 15% more purchases completed when they offer a BNPL solution, and also an increase of up to 30% of average order value. But finally, if you were in our session earlier today, this won't be a surprise to you that the third trend is the rapid rise of fraud, particularly in the e-commerce channel. With more and more consumers transacting online and via their mobile device, we've seen a significant uptick in fraud. In fact, US consumers are the most victimized by payment fraud globally. E-commerce alone projects to cost retailers, e-commerce fraud alone projects to cost retailers over $200 billion over the next 5 years. And while this is the case globally, take a deeper dive into a few trends here in North America that we've seen. First, in point of sale, the North America point of sale market has rebounded quicker than expected in 2021, following the reopening of stores after the pandemic. Cash has been in decline for some years, but it did stabilize briefly in 2021. Although long-term declines project to continue until 2025, when cash will account for only 6% of total transaction value here in North America. Cards will maintain the most aggregate share of transaction value, but we are seeing a slight adjustment in the ratio from credit to debit. And finally, as I mentioned, in line with global trends, we've seen a rise in BNPL and digital wallets being used at the point of sale in North America. On the e-commerce side of things, we're seeing a much larger growth in mobile commerce versus desktop commerce, growing at almost twice the rate. This means that more and more consumers are transacting from their phone rather than a computer. Cards remain the dominant player in e-commerce market, but will continue to erode market share to digital wallets, which will account for nearly a third of all online transactions in the coming years. But what's contributing to that growth? There are 5 key factors driving the growth of digital wallets, which have seen a growth of nearly 150% over the last 3 years and project to grow by another 70% in the coming years. PayPal, Apple Pay, Google Pay, Amazon Pay. These are all examples of brands which seek to become financial super apps that combine diverse functionality, including payments, into one simple app. Digital wallets streamline the checkout process for consumers. They offer simplicity and speed and bring both convenience and security into the checkout process. They make it much easier to actually complete the purchase. Many digital wallets, as we've discussed, are part of marketplace ecosystems. Take Amazon Pay, for example, which brings the checkout process directly into the user journey. And in the point of sale, a rise in contactless payment terminals, spurred by the pandemic, has certainly contributed to the use and proliferation of digital wallets. Finally, as I mentioned briefly earlier, an increase in flexibility in wallet funding methods is another driver, including mobile carrier billing in some markets, particularly emerging markets. So what does this all mean for you? A 2019 study done by Ericsson found that 56% of smartphone users expect their mobile carrier to anticipate their needs before they know them themselves. With payments being increasingly woven into the digital landscape, there are 3 key considerations that should remain a part of your strategy. The first is around frictionless purchasing. You must include an embedded purchasing experience into the bill pay or checkout experience for a consumer. Take Uber, for example. We all know how easy it is through 2 or 3 clicks in an app to order an Uber, pay for it, and tip your driver. Consider now if you had to go into the Uber app to order that ride, but then in order to pay for it, you had to go into another app or website, pull out your credit card, type in the information, and then when you got to your destination, fumble around in your pocket for a couple dollars to tip the driver. Imagine the ramifications that would have on conversion or repeat usage. As a merchant, you must have payment flexibility. Customers will pay how they want, and you must have the ability to accept multiple payment methods. You need not only the traditional credit options, but also the new and emerging ones that we've talked about, like digital wallets, buy now, pay later, and also cryptocurrency and digital currencies, which are starting to make their way into the marketplace now as well. Finally, can't underscore enough that this all must be done securely. Fraud is one of the biggest pain points in all industries, and telco is certainly not an exception. But this is a balancing act. If your fraud defenses are too weak, you'll obviously see an uptick in fraud and the cost of processing chargebacks. But if your fraud defenses are too strong, you'll see lost revenue from abandonment and create a poor customer experience. The only way to do this right is to deploy proven solutions that are built on scale. And proven solutions that are built on scale and can increase approval rates while minimizing false positives. So as I wind down, I'd like to just share one example of something that ties this all together. We've been working with a customer for 10 years now, a global MVNO, who came to us as they looked to differentiate themselves through a focus on customer experience. They realized that their business model was stagnant, low growth, and in order to achieve that future growth, they would need to diversify into new markets and new services. They wanted a partner who could not only provide those services, but advise them which markets should they be looking to, how should they move into them, and can they move into them and still keep the same value offering that they provide in their home market. We were able to provide them the insights and the tools to do both. The guidance for which markets they could transition into easily, which markets might be challenging, which markets there were opportunity, and which markets they could still provide their same services. Today, we process with them in over 30 countries and provide seamless single source visibility across all of their sub-accounts in multiple regions. We actively help them manage their transaction approval rates to find the optimal balance to maximize revenue. In short, this couldn't be done without their global scale, without their global ambition and our global scale. So to conclude, I'd just like to say the overlap between telco and fintech has never been greater. With the right payment strategy, you and your business can utilize payments as a competitive advantage and open new doors. And then finally, as one last little plug, our company has a booth right over there behind the telesign booth. We're right as soon as you walk out. So if you have any additional questions for me or my team, We'll be here all day. We'll be here for the rest of the conference. So please do feel free to stop by and have a chat. Thank you, everyone.
Fantastic, thanks Jeff. Super presentation, which I guess has really helped frame this session. So as I said at the introduction, Worldpay, global partner, billions of dollars going through their system, millions of transactions. And now we're going to explore a kind of different end of the market, if you like. We're going to explore some new technology, so blockchain specifically, and how some of our partners are building new proposition leveraging that technology. I'd like to welcome on stage Ling from TBCASoft to share his presentation. Ling.
Thank you, Brian. Thank you, Jeff. Jeff gave us very good overview about what happened in the United States. So I'm going to share a little bit things from the other side of the world, which is APAC. So I look like people coming from APAC. I'm a Taiwanese, just so you know. You can call me Ling Wu, or you can call me Wu Ling. Either way works. Okay. All right. So I have two titles. One, I'm a co-chairman of Carrier Blockchain Consortium. Later, I will mention why we want to work with carriers. Another, I am also the founder and CEO of TBCASoft, Telecom Blockchain Alliance Software. So very, very telecom oriented. Okay, so I'm going to talk about mobile payments, especially post-pandemic. So the world changed a lot. Not only the weather, but payment changed a lot. So this is the chart that shows the QR activities. So Juniper Network shows that 2022, there are 2.4 trillion transactions processed by QR payments. QR payment just started for a few years. Visa, founded in 1974, they processed 10 billion. So you can see how fast it grows. 10 trillion, and QR doing 2.4 trillion. All right. But it doesn't mean that QR payment doesn't have problems. Let me show you. Jeff mentioned that if you are a merchant, you want to be flexible. So let me show you how flexible this merchant is. Like this. It's so flexible. This is the picture I took in Kuala Lumpur. The merchants, they accept all different QR payments. So if you're a user, you need to find the right one. I can accept it. And you don't see Visa. You don't see MasterCard. So that's what happened. Right? But you see so many QR codes. It just doesn't make sense. It took too much real estate of the desk. All right, so the problem is the merchant, all these services, they are silos, so they cannot cross sites. Imagine you have a Bank America card. You need to look for Bank America merchant. It just doesn't make sense, right? So that's what we are doing. We do HiVex. So it's a scan and pay without boundaries. So that means this belongs to two different payments, one in Japan, one in Korea. They only offer to Korean people. This payment service only offered to Japanese people. But now you can bring anyone and go there to scan and pay. That's what we are doing. In order to do this, we need to solve two problems. The first of all, we need a central clearinghouse equivalent things to do that, to clear between different parties. But we don't build it. There's no central clearinghouse we built to solve this problem. So we use blockchain. There's no single point of power to control. There's no one can say, starting tomorrow, you cannot shop. Okay, there may be good reason, but once you have the power that can be used in different ways, it should give the decision to individual, but not the central one. So the world is starting dividing. I think it's not a good idea. The central power is going to end. You need a new way of collaborations. Telecom, global telecom, doesn't have a central control. It's telecom to telecom. So same concept. So we are building a clearing service without central clearinghouse. Second, we need to solve the interoperability problem of QR. It's not as straightforward as you guys think of. The QR may collide. Different people have different standards. How do you solve it? How do you find a solution when you introduce a new QR brand that don't need to modify POS system? And so we have the technology to solve these two things. Okay, so this is the second thing I mentioned. So Hivex provide a feature. So you don't need to download new app. If you are a mobile payment service provider, you sign up Hivex membership, we give you a small icon. It's a cross-border icon. Once the user click that, anywhere that you see a Hivex member, you can do the payments. So that's what we're doing. And again, there's no POS system change required at all. The merchant doesn't need to learn new process. They just accept the same way as they did before. Okay, so this is the blockchain network. Why is related to telecom? Telecom participate with two ways with us. The first of all is who is building the consensus? We are using blockchain. Who are using that? So we are talking to telecom. Telecom, you have very good network. You should build a consensus with us. If you don't want to participate in payments, then you do that. So meaning our blockchain, we don't have miners. There's no mystery miners. We don't do mining. We don't do cryptocurrency, neither. We create the data integrity with telecom. So telecom, you have a server, you have a connectivity, you can participate of the consensus. No single control. Second way, Jeff just mentioned DCB, direct mobile billing. So you can see one side we have issuer, another side we have acquirers. So telecom is usually not very good to be an acquirer. If you want good acquirers, talk to Jeff, the best acquirer in the world. But you can be a very good issuer. I'm using T-Mobile money. Anyone from T-Mobile? Good. I'm using T-Mobile money. But to be honest with you, I have nowhere to pay. I have nowhere to pay. I open it because it offers 4% interest rate, but only $3,000. I would love to use T-Mobile money. If I can go to Kuala Lumpur, I see all those things as scan pay, that'd be great. Okay, so telecom can use two ways. In our member, we have telecom, they do DCB. They just, I want to do very small amount. There's other carrier, they start up a new payment service like T-Mobile money, then they can pay. So that's how we are doing business with telecom. Okay, we are actually building a consensus together with global telcos. So in the first step, we are transfer fiat currencies. Again, we are not transfer cryptocurrency. We are transferring value of fiat. That can be anything. That can be NFT, that can be other stuff. But let's work with a plan. We combine all the cell phone together so we can send money first. Later, when the regulation, they decide to open, we can do different things. That's why we want to work with the telcos. Global telco has a very, very good advantage to build such a data consensus together. Again, no single point of value, no single point of control. It's a pure collaborations. In the divided world now, we need a system like that. So you know, SWIFT, everyone, when you wire money, you need to do SWIFT. But China and Russia is building another SIP. It's going to divide it. It's not going to work that way. So with a new way, I want to work together with the global telco to create such a network. So no single point of control. Okay, so this is a consortium. We have global member. Spring was still there. Now Spring become T-Mobile. We can talk about that. But so a lot of Asian telecom. Globally, we have 19 members. We are building some cases. Very, very interesting. I think you don't want to miss that. Okay, so this person is CEO of SoftBank Telecom. So they announced this collaboration by SoftBank Telecom CEO. So as I mentioned, they have a different investment. They build a consensus together with us. There's a launch, a very big, successful mobile payment company called PayPay. There's another company called Ling. They belong to a Korean technical giant, Naver. So we are connecting Asian payment all together. Combined, we cover 500 million people and 4 million POS using our services. So if T-Mobile join us, then T-Mobile user can go to those places to use T-Mobile money to pay, where Visa doesn't have penetrations. So there's a new rules. The Visa is a very good solution, but there's a rules for them to engage. That doesn't make sense for particular merchants. But mobile payment is different, very, very different. They cover much, much faster. They grow very fast. Okay, so that concludes my presentation. Thank you very much for your time. Again, my name is Ling Wu. You can call me Ling Wu or Wu Ling. Either way works. Thank you.
Thanks, Ling Wu. Super presentation, exactly as we said, talk about how new technology is being leveraged to create opportunities and create new propositions. And so I'd now like to introduce Rajesh. Again, similar kind of theme, new propositions leveraging blockchain. Rajesh?
Thank you, Brian. Thank you, Ling Wu. And thank you, everybody, for having me here. I'm Rajesh Sabari, driving all commercial activities for Telcoin. So today we know that the payment and monetary landscape are on the cusp of far-reaching change. The ongoing digital acceleration has led to the emergence of a plethora of digital currencies. Primarily, what they are trying to do is address the needs unmet by the current bank-centric payment system. And we all know about the smartphone is ubiquitous today and on its way to be accepted in most of the emerging markets. So with this in the background, the telecom providers have been proliferating the mobile financial services globally, and this includes for providing not just remittance, but money transfer, payment of utilities, bill payments, salaries, etc. And with this in the backdrop, what we are seeing is the potential of blockchain to address the inefficiencies that exist within the current money transfer business, and the potential to integrate this within the remittance to remove the disintermediaries and provide additional value to the consumers. So we at Telcoin, right from our foray, have been focused on this intersection between harnessing the power of blockchain and the telecom's vast distribution capabilities to drive mobile financial services, to bring value-added services to the vast unbanked and underbanked globally. So a quick overview of who we are, Telcoin. We are registered in Singapore, 60+ people, but with offices spanning globally. We are a compliance first and compliance by mission company, and what that entails is that we only operate in jurisdictions with the appropriate money service licenses, whether that's for the traditional fiat or the emerging crypto standards. About 1/3 of our employees are directly engaged on supporting the compliance function or indirectly for various anti-money laundering and the back-end system needed to process these various transactions. We also have a very close relationship with GSMA. We are honored about that, and we are among the first crypto tech company to be an associate member of GSMA from 2018. And we are also actively working with governments globally, especially in the United States, where we were instrumental for the first crypto legislation in the state of Nebraska. And we're also poised to be the first digital asset bank and a custodian, which will enable us in future to issue stable coins backed by US Fed deposits. So specifically today, we'll focus on what's our value proposition for the MNOs. We've been collaborating with them for the past few years. So starting with the easy entry point, the hook is always the fiat remittance. There are about close to 300 mobile money wallets globally, a vast majority of them in the emerging markets. And the value proposition there is we are able to source traffic in developed markets. So these are the donor markets, US, Canada, Australia, Singapore, where the diaspora want to send it back to their family in emerging markets. We're able to source through our app, provide cheap rates and near instant settlement to transfer this money into these various emerging markets. And obviously the next evolution of that would be into stablecoin. Why? Because there is potential for improvement in speed, transparency, and most importantly, the fees. How do we bring it down from 2 or 3% even to pennies? And that can happen only when you move into the blockchain. And we're also already, we have our a decentralized finance wallet. And we are open to white labeling and working in close partnership with the various telecom providers for various use cases, for opening up for trading, for aid disbursement. And the last but the most interesting part is as well, we have our private blockchain processing network exclusively built for MNOs so that MNOs can participate not only in the application layer, but be able to take a share of the settlement and the clearing that happens when any transaction happens on our network. So this is, again, an illustration of our digital-first mobile application. What you would see is alluding to Jeff's earlier point on providing a seamless, frictionless customer experience. We have worked with our partners so that any customer can load in their money within the wallet. They don't need to move outside that. And once they load, there's full transparency in terms of fees and to the beneficiary that they have to send in a different market. What you would see with the stablecoin is that the fees are coming down. Typically, the floor is about 2% when you want to send a fiat dollar, say a $200 into Philippines. It moves into pennies, or specifically here, 20 cents if you move into a stable coin because you remove the disintermediaries. And the last is all about the user-owned digital asset wallet, where users have full control about the digital assets and don't rely on custodians. And we have a lot of news recently where people have lost money because they have transferred the custody to a centralized party. From US and Canada today, we are operational. We are able to connect and push money into these markets. We're connected to about dozens of mobile wallet providers globally, specifically in Southeast Asia, South Asia, Africa, and they're able to do it at the lowest fee rate in the market possible. Here's a quick illustration of the user journey. Oops, sorry, the video is not. Okay, so there was a video, I'm sorry about that. It was just illustrating the workflow. But what happens is, in this specific case, a user downloads the app, goes through the full KYC onboarding process. Once that is completed, they're able to load their dollars in, choose the beneficiary, all within the context. It's all a contextual experience within the Telcoin app. And the beneficiary then decides which wallet they would want to receive the money in. And in this specific case, what we are seeing is, in terms of stablecoin, not only the fees goes down, it also empowers atomic settlement. The average time today for any settlement for the money to go, the World Bank states is 4 to 5 days. And the average rate, again, according to World Bank data, is about 7% in terms of remittance fees. This comes a lot from the hidden markup. And last but not least, in some of the emerging markets, it can go up to even 10%. So when you move through stable coins, these are fiat-pegged stable coins, so they are not volatile. These are coins where people go through an audited process to publish the reserve, and so that it's fully secured. And our app enables this to transfer instantly and at very low fees. We are aiming for this to be in pennies. And there's full transparency upfront in terms of what the beneficiary would be receiving. So you could see the benefits are directly translated into savings for the beneficiary and as well as the sender. And this is something, as I mentioned, we have an app in the US market, and we are seeing tremendous growth. About 20% of US adults already own some form of cryptocurrency. They want to participate in this. So our vision is today we see in terms of trading fees, we generate an average of about $35 for every active customer on our app. So when an MNO in US want to white label our app and offer these to interested audience through targeted marketing, then they are able to generate these ancillary revenue stream as well. So there's a growing demand, and most of these coins that we list on our platform go through a rigorous compliance process again to make sure they goes through a whole gamut of tests to make sure they're not a security, they have high utility, and they're not volatile, and they fit the purpose for that specific market as well. So we are very excited about bringing this to telco operators. Last but not least, we also have a layer, as I mentioned, for the settlement. There already been some work that's been done. The most common example being used is Deutsche Telekom, which has participated in their own proof of stake for generating incremental revenue. So what this enables a telecom operator to do is be part of a forum which is responsible for performing secured and compliant transactions across our blockchain network. This could be a money transfer, this could be a payment on a blockchain network, and grab a revenue share from this global transaction pool. And being a GSMA member, we are opening it only to GSMA MNO members at this juncture. And we are pretty confident that having this would again benefit the ecosystem because we are able to keep the transaction fees down, and telcos, naturally being a trusted and regulated entity, would also provide that confidence to the end users in terms of early adoption. With that, I would like to conclude my presentation, and thank you. And I just wish to mention my colleagues and our founder are here as well, so if you have more questions, we would be more than happy to engage you later today. Thank you.
Using the Telcoin application.
Rajesh.
Launch the Telcoin app and tap Send. Enter the recipient's details and input the amount to send. Check the details, enter your PIN, and confirm the transaction. The beneficiary will receive a notification which they can tap for options. Then they simply select their mobile money account and tap Accept. It's that easy.
Big thanks to Rajesh for his presentation, and allow her to welcome Jeff and Ling back to the panel, back onto the stage to have a short Q&A on some of the work that we've just seen. Thanks, gents. Jeff, perhaps if I can start with you. Thanks, great presentation on kind of trends in North America. How do those trends compare to the rest of the world? Could you give us an overview of that?
Yeah, so to start, I think a couple key trends, and hopefully some of these came through in the presentation. One area that North America is a little bit different than the rest of the world is that North America is a little bit more skewed towards card transactions, right? So we're still a card-heavy market. Some of that is because the major card brands are all based here. Reward programs are a little more beneficial to the North American audience, but we still are very much card heavy. And then on the flip side, cash is virtually non-existent here. I was in London last week, actually just outside of London, and I had landed. I needed to take the taxi. Ended up taking an Uber, but there was a taxi sitting there to where I needed to go, and I asked him if I could get in. He said it was cash only. The next taxi, cash only. I haven't actually had cash here in the US. I can't even tell you. It was probably pre-pandemic. So that's another glaring area. And then I think with some of the emerging new methods that we've talked about, digital wallets, buy now, pay later, North America is still playing catch up a little bit. So buy now, pay later is really big in Europe. Yeah. It's getting there here. Digital wallets are dominant everywhere in APAC. They're big here, but it's still catching up as well. So those are a few areas where North America, I think, is unique.
Super, thank you. Ling, if I can come to you. Firstly, any solution that is a solution to a problem of interoperability really should deserve a round of applause, because it's like really hard, really, really hard. What is it though about blockchain specifically that was required for the solution, to build that solution?
Okay, so as I mentioned earlier, excuse me, in order to do this, you need clearing services. So before blockchain was invented, you have only one way to do it, to create a very trustworthy central clearinghouse. So long time ago, I think that's the only way to do it. But when the transactions becomes more and more, and everybody is rely on that, you need a much better services to do the same thing. So we think blockchain is important. That's the first thing. Second things, when mobile payment will become very, very strong. Take Alipay as an example. They become so strong. And that happens everywhere. Same thing, Venmo, PayPay in Japan, PayPal, they will be doing everything. You need another entity to build the trust instead of themselves. They have too much power. But telco has been very trustworthy partner to build a neutral network. So I think we should bring the power back to telecom. So number one, no single country, no single company can control everything. Second, you don't conflict the interests of those joint. And so that's why I think telecom plays a very important role for blockchain network.
Thanks, Ling.
Yes.
Rajesh, for you, the early part of the presentation was around remittances, and there was a slide there about the number of MNOs who offer that as a proposition to their customers. So perhaps that was a bit surprising. So is that a kind of real clear strategic focus for MNOs now?
Sure, great question. Thanks, Brian. So remittances is about a $700 billion business, growing at about global average 4%, but emerging markets very rapidly. Caribbean, Latin America, 25%, Africa, about 15%. Having said that, GSMA's own data shows only mobile money wallets capture 3% of all global remittances. So a lion's share of all the digital mobile money is being captured by FinTech and mobile transfer operators emerging. So yes, it's a fast-moving, high growth, but also extremely competitive and saturated. So now the ones which are doing well, what we have seen are, and I told myself I will not use M-Pesa Safaricom because it's a poster child for everybody. But there are other great examples. Docomo's D-Card, for instance, which I was personally involved with, they not just focus on money transfers, but also you could use on your day-to-day payments. GCash Globe in Philippines bring an element of gamification in as well. You're able to earn green credits for specific carbon transactions. They're also enabling working with crypto partners to accept different coins. And last but not least, also Turkcell, Paysel, they're adding the credit facilities and stuff. So what we are seeing is telcos increasingly are also gravitating more from just a standalone siloed remittance app into a more lifestyle app offering microcredit, insurance, SME services, and other like paying utilities, building an ecosystem of partnership to facilitate that.
Super, thanks, Rajesh. And Jeff, if I can just come to one of the slides that you put up. You talked, I think, one of the areas of focus was frictionless purchasing. So what is friction? What's actually happening right now, and what are the solutions to fix that?
Yeah, so I mean, there's a couple of examples I could give. I think one in particular is around abandonment. So take the Uber example, right?
Yeah.
The friction of the consumer having to leave the app, pay in another app, find cash in their pocket to tip. But also abandonment from fraud solutions that are too strong, right? So it can be an embarrassing experience if you're trying to pay for something at the register and you get declined, right? There's other people around, you don't know why you got declined, and it could be nothing that you did wrong, right? Nothing that was your fault. It's just the merchant's fraud solution identified something that was a false positive. So that's one major example. And then I think another example of friction is just not offering the payment methods that customers want to use. So, probably everybody in this room or most in this room have a corporate card. For some, for us, our company, it's American Express, but not everywhere takes American Express. So, then that's a challenging situation. Do you have to put it on your personal card? Do you have to run it again, right? Or if you have it loaded onto your digital wallet, you don't have the card with you, and they don't accept digital wallets, right? So I think the ability to accept multiple payment methods and allow the consumer to pay how they want is another way to solve that.
So you're seeing much more focus on that problem now?
Yeah.
Is that?
Yeah.
Okay. Ling Wu, from just kind of going back to one of your slides, so the proof of concept, the kind of the pilot for it was between Japan and Korea, is that correct?
Japan, Taiwan, and Korea.
So as a consumer in Korea, I can go to Taiwan or Japan, and I can use my wallets to make a payment using a QR code.
Yes.
Rather than before the solution, I would have had to open up a wallet in Japan to use a QR. Is that correct?
Yes.
Fantastic. And what is the future? Where do you think that's going to head?
Okay, the next step, I want to invite Jeff to join us. Okay, so before the network is built, if you want to do mobile payments, you need to do two sides. You need to be a good issuer. You get a lot of users to sign up, like T-Mobile. In the meantime, you need to be a very good acquirer to acquire merchant. Otherwise, this business doesn't work. But once we create this network, we can enable either one. You are good on one side only. So before that, it's not possible. So right now, in the first step, we are linking all those mobile payment providers. They have both sides, of course. They are sharing. But that opens to another opportunity, like T-Mobile. T-Mobile, they don't have merchants, but they have a lot of users. I can invite T-Mobile, like me, I can carry the same thing. For example, like FIS, they are very good acquirers, so they can also join. So the reason we chose Asia is because mobile payment go very, very fast in Asia. But our next step will expand the service to United States, Europe, North America, and South America. Right.
For remittances. So remittance moving to blockchain sounds like a real disruptive play. How do you see that moving forward?
Sure. So we think it's a natural evolution from fiat into stablecoins. What stablecoins are basically backed by real-world liquid assets. To be very specific, it's fiat-backed dollars, whether it's a U.S. reserve or any other currency, and being fully transparent to audit, especially in the context of what's happened in today's world. So I think there are a few things. The fintechs have done a great job to bring in the fiat world to back 2% the fees, and that's pretty much the floor. And a lot of the benefits still are in the developed markets. So if you go into a developed markets between US to Singapore or US to Australia, probably there you don't see the incremental benefit from blockchain being so conspicuous. But for emerging markets, that's where the challenge is. So if on either side, say the recipient from US to African market or Southeast Asia, then there's huge potential to bring the fees down, to process it faster. And it's not just the private players. The governments are getting into retail CBDCs or central bank digital currencies because they want to have control and ownership as well on the transactions. So I think while we are focused on this disintermediation, I want to emphasize it doesn't necessarily equate to deregulation. So even if you move on blockchain, in terms of the onboarding process rules on both sides, the transaction details to be captured and in real time catch the fraudulent or any anti-money laundering case, that still need to be prevalent as we move into the blockchain. And we are seeing already great examples of it between in Korean Bank and Standard Bank in South Africa establishing their own. And we would see more of this blockchain-based remittances.
So you could see a substantial portion of the remittance market moving to blockchain in the next 5 years. Is that?
Absolutely. I mean, in two ways. Maybe initially it could be on the wholesale. What I mean by that is it's a bridge currency and a bridge asset stablecoin that's being used at the wholesale level, but it's transparent to the retail, to the consumers. But eventually, directly a consumer would have the option, and in our platform, they would be able to have the option to decide what type of stablecoin and be able to trade it with various liquidity pool providers to transfer. Say, for example, the stablecoin equivalent of Philippines, if they want to convert from the USD version and be able to send it to the beneficiary.
Super, thank you. Jeff, if I can come to one of the trends I've seen recently is crypto being embedded into payments processes now, so I can pay by crypto as a consumer at the merchant checkout. So can you tell us a little bit more about that trend, how you see that progressing?
Yeah, so I think we're going to see a rapid uptick in crypto acceptance and more merchants wanting to allow consumers to pay with crypto. And it's what I think I was just talking about, but customers are going to pay how they want. And there's a lot of people out there that have a lot of cryptocurrency.
Yeah.
And largely to this point, it's been almost exclusively just an investment vehicle.
Yeah.
Right? But its name is literally currency. And people have it, and now they want to use it. So I think the strategy around it, again, is when you open up the doors to accept multiple forms of payment, right? To accept crypto, you're opening up your spectrum at the top end of the spectrum, right? You're opening up to new customers, or you're providing value to current customers so they don't leave and go to other merchants. So I do think that that's something that we're going to see more and more. I mean, in fact, we've already started to see it a little bit in the telco industry, right? With some MNOs out there accepting crypto. We've seen it here in the U.S. and government. I think Colorado was the first state to allow consumers to pay their taxes with crypto.
Okay.
So yeah, I think it'll start to come online a lot more, particularly as things start to settle down in the crypto market now, and people can kind of align around what the strategy should be and how to approach it.
So it's a very early stage, but you can see that emerging. You can see.
Yeah, I'd say it's very early stage still. I mean, I'd say even from our perspective, we're just we've gotten just started to get our feet under us on how to process crypto, how to settle it, and there's a lot of advantages to that, right? I mean, it's just instant settlement. It's the safety, the security, the visibility. So there are a lot of benefits that traditional payment methods don't offer.
Super, thank you. Ling, can I ask you, I was really struck when you showed the picture of the merchant with 7 different pieces of material to if your solution gathers momentum, what would that user experience, what would the merchant experience look like in your picture? There'd just be one thing? Is that what you would see?
Right. So the merchant, for that particular merchant, he needs to sign up 9 different services.
Right.
It just doesn't make sense.
Yeah.
He can just choose one. And all the other users, including user from US, they can all scan that. I think that should be the future. That will happen for sure, but we need someone to make it happen. So we already have a group of Asian mobile payment service provider. They want to do this with us. So I think that's what will happen.
So effectively, consumers can sign up for whatever app they want to, but from a merchant perspective, he has one partner to engage with, and you pull all those various propositions together to make sense at the point of sale.
We want to put the dependency between user and merchant. You choose your favorite wallet.
Yeah.
You choose your best acquirers.
Yeah.
Then you can do the acceptance.
Yeah.
And because we had a chance to build a Visa-like network 48 years after Visa did. So we can use the latest technology, we can dramatically reduce the fraud. So Visa every year account $40 billion for fraud loss. We can cut to very, very minimal. So I think there's a chance. Of course, we want to work with the global telcos. Yeah. Telco has KYC, Telco has a very good data center. I think we have a bright future for this.
Yeah. So I think both from Jeff's presentation and Ling Wu's presentation that this wallet has really come to the fore. Rajesh, you've got a wallet as well, so how do you see that progressing in the future?
Sure. So the DeFi wallet we have, and we work on a partnership with a telecom, and they're able to white label. Not only helps them generate ancillary revenue streams, but also creates that differentiation and stickiness with the core. And it's not just about trading that it facilitates. There are a lot of other positive use cases. Jeff just mentioned about payments. And when that happens and becomes ubiquitous, where people are able to use a crypto for payment, it also solves the problem of double hop, where people don't need to change between crypto to fiat when they receive, and you're reducing the fees. So we see that as a positive. And the other impact is to do good, which a lot of telcos are focused now on in financial inclusion. In terms of aid disbursement, the leakage is very high. Even in US and stuff, about 20% of the money that's being dispersed from here into beneficiary markets go to leakage. So I think there's plenty of potential working in conjunction with the telco partners to bring this for rapid mass adoption, especially the DeFi wallet. And for customers, it's not just about the fees, but it's also about the control and ownership that they gain in terms of a self-custodied wallet. So, but we also provide the security layer, and because most of these transactions are cryptographically secured. So I think telcos are ideally the best players to replace or sort of be a substitute for the intermediary offered solution from the traditional financial institution providers, because they understand the regulation well.
Yeah, super, thank you. So we're nearly out of time, but just one last question. I'll need you to be brief if I may. So given it's such a dynamic market, payments, it's very difficult to project the future, but what would be a good year for you? So for Ling Wu, what would be a good 12 months for HiveX?
Okay, so I think 2023 will be the best year for us. In the past 3 years, people don't travel that often. And as you guys know, that Japan Prime Minister just announced they opened the border for visa-free travel. And I'm flying to Tokyo on Sunday. They are expecting a great revenge travel. So people did not travel, so they want to revenge. Everybody want to travel. And people don't like to touch cash anymore.
Right.
It's not clean. And doing scan, QR scan, is totally contactless. You don't even need to bring your card. So I think 2023 will be the best years.
Good year for QR code, yeah.
Yes.
Fantastic, thank you. Jeff, for yourself?
Yeah, so I'd say if I'm looking back in 12 months, I hope we can say, it's a good thing that we got inflation figured out 11 and a half months ago. But in all honesty, I do hope inflation gets kind of settled down. We get a grip on it a little bit, because obviously for our business, the more people are out spending money, and payments are being made, we'll be the ones processing them. So
super, thank you. And Rajesh, for yourself, for Telcoin?
Yeah, so I think 12 months is a long time in this fast-moving landscape. But I think what we would like is mass adoption of one of these use cases, whether it's for payments or whether transfers or digital asset tokenization. Most importantly, instilling that trust and confidence with the regulators.
Super, thank you. So, Jess, we're out of time. Thanks very much for your time. Just there for 1 second. So, if we could just acknowledge the contribution from Rajesh, Jeff, and Ling Wu, please. Thank you. And